When it comes to a housing loan, it's a long-term product,
Okay.
right? If somebody applies for a housing loan, the term can range from either 15 years, 20 years, it can even go
30.
up to 25, 30 years.
Correct.
Okay, right? Now one bank is giving you money and it is expecting you to pay back in the range of 15 to 30 years.
Right.
That means first thing is you have to be alive right, for that long time.
Right.
Second, you should also have consistent income enough to pay them back.
Correct.
Right? So if you have to be alive, then their age group matters. Second, if you have to pay them consistently, then income matters.
Right.
Right? Third, if they are risking their money by giving you for such a long time,
Right.
then your creditworthiness also matters.
Correct.
Right? So this is where the CIBIL or a credit score.
Right.
CIBIL is one of the credit bureaus that operates here in India. While looking at the credit score from a home loan perspective, one banker checks the default. Are there any negative flags?
Okay.
It's a straight away rejection.
Okay.
Second, even if there are
What do you mean by negative?
negative flags, so there are 4 kinds of negative flags. One is written off. That means customer hasn't paid.
Okay.
Okay.
In the past.
In the past.
Okay.
Let's assume it's a credit card which has gone into written off flag.
Right.
So that means customer hasn't paid the bank for 6 long months.
Okay.
So it's a compliance for the bank to write off that particular account. If a consumer doesn't pay for 6 consecutive months,
Okay.
and they report to CIBIL as written off that particular account.
Okay.
So that means it's straight away default.
Okay.
Customer is not paying. Second is settled.
Okay.
Settled is a sort of negative flag, but settled account is equivalent to closed account, but it's also a negative. Wherein imagine I have a loan account.
Okay.
Okay, let's assume it's a credit card whose outstanding is ₹1,00,000. I don't have money. I go to bank and tell the bank that I don't have money and I hasn't paid you also from past 4 months.
Right.
Now I have some lump sum money via which I want to settle it off.
Right.
So bank, instead of getting nothing, rather they take that money,
Right.
So my outstanding is 1 lakh. I pay 50 grand or 50,000 rupees and settle it off.
Right.
Now 50,000 rupees is a loss to the bank, right?
Correct.
That's the reason they report it as settled.
Okay.
Yeah.
That's also
In the
a red
credit
flag.
report. 100%, no, bank has lost 50 grand.
Right.
50% is gone
Of course.
from their outstanding.
Okay.
So it's lost to the bank.
Done. So that's
Okay.
the second type.
And there's something called post written off settled.
Okay.
Okay. Post written off settled is first it was written off. That means I haven't paid for 6 long months and account got into written off.
Okay.
Now after getting into written off, maybe collection agencies were behind me.
Right.
Because of the pressure, I'm coming and settling the account.
So you're paying the remaining amount.
Not really remaining amount, but a part of the remaining amount.
Okay.
Yeah. Let's assume the outstanding is 2 lakh rupees.
Right.
I'm settling it at 1 lakh rupees. Now, bank is telling the other banks, which might give loans to me in future, that this guy didn't pay and the account got into written off.
Okay.
Then he came back and settled the account.
Okay.
Now it's post written off settled. You get the point, no?
Okay. So he only wrote off after lot of follow-up from the bank. I mean, he only came and settled after lot of
Follow-up from the bank.
or through
Collection agencies.
Yeah. Okay.
Basically taken the consumer to the court in a high value cases, maybe 5 lakh, 10 lakh rupees. It's a personal loan.
Right.
In a personal loan, there is no collateral.
Right.
And they have to take the guy to court.
So these are the main 4.
These are the
absolute red flags.
Absolute red flags
So
for
that's
any
the
bank.
That's the first thing bank look at.
It's a straightforward rejection also.
Okay. So you're not going to get another loan.
100% sure.
Okay. So does a bank look at in your
The
CIBIL?
second thing that comes, the major flag that comes into picture is late payments.
Okay.
There's something, we call it as, in a technical term, is DPD,
Okay.
days past due.
Okay.
That means, let's assume I have a personal loan and 5th of every month EMI becomes due.
Okay.
Okay. If I'm paying on 5th, then there is no
0 day past due.
Yeah, 0 days past due. Right.
Right.
No? If I'm paying 20 days late, it gets reported as 20
days.
DPD.
Okay.
Or 20 days past due. So if it's 60, then it gets reported as 60 DPD, 60 days past due.
Right.
So if banker sees any of these late payments, okay, he would never ever approve a home loan because I'm unable to service my personal loan on time. How do you think I'll service my home loan, which
For
will
30
go on
years.
for 15 years, 20 years
Right.
on time? Right, no? You get my point, no? So bankers will, that's a straight away second red flag for any banker.
Okay.
So there's no trust. That means this guy is not reliable over a long period.
Correct.
So that's a straight away rejection.
Okay.
These two are the major issues that comes into picture when, while approving a home loan.
Okay.
Late payments, negative flags. If these two are right, 99% of the times your loan should get approved, unless there is other challenges, the other factors. See, whenever somebody approves a housing loan, there are 3 C's that comes into picture. One is credit worthiness, which we just discussed in terms of CIBIL or
Right.
your credit score. Second is your collateral. Your
Okay.
collateral has to be worth
Whatever they're
the
paying.
dispersal,
Right.
right? Third is your capacity. Capacity is your income.
Okay.
Wherein they ask your income statement, salary slip. If you're working for a MNC, then they want your offer letter to confirm your package
Right.
and all these things, which helps them measure your capacity
Okay.
to pay for housing loan.
Right. So from a consumer's perspective, this is what the bank is looking at.
This is what the bank is. These are the basic things that what banks look for.
Okay.
And let's assume you have one has less capacity in terms of approving less capacity, or he has also multiple loans which he's already servicing, and he has less disposable income to the loan that he is applying for. Then they pick up a joint account.
Okay. With your spouse or something.
With your spouse or your parents or your brother or anybody who has an income, and you can equally share the EMIs.